Ladies and gentlemen of the crypto space, we're live at 11:31 a.m. on a Friday, May 7th. It's the end of the week. What's going on? The Fed, they're hinting they're hinting a lot of things, and it gets my mind spinning because folks look at the news and they hear stories, and the stories are very subjective, and they all have opinion written all over them. I like to look at the stories every now and then on mainstream media, and I know so much more broader context than what they're specifically talking about. And like the biggest story in my mind, really, right now, is the digital yuan out of China, and the BSN is the National Blockchain Initiative, and we hear more recently than more recently than not chatter about the U.S. digital currency. Um, and we're talking July there and stuff like that. They're talking about trying to push out some early pilot programs. It's not talked about, and it's almost assured that there's a money arms race going on right now, and it's probably predominantly China and the U.S. Um, the digital yuan would put so much pressure on the global financial system and attract so much interaction and generate so much opportunity. And that's really all a financial system is. It's a game of opportunity. And it's pure Gresham's law. If China comes out with a better opportunity, people are going to use that currency. And if enough people use that currency, then you get geopolitical power shifts. So the whole focus and attention on from the Federal Reserve and anyone interested in domestic monetary issues is about the dollar maintaining its desire to be used. So that's not going away today. It's not going away anytime in the short term. We haven't seen any significant changes in that regard. And this is where, like, Brent Johnson comes in with the milkshake, and that's overwhelmingly still in play. The dollar is the status quo. It's pervasive, it's everywhere, and it's the in-demand asset. But just like we talk about in trading, and just like we talk about the narratives and the stories of these crypto assets, we're not thinking about today. We're thinking about time horizon. We're thinking about the way things may or may not progress. We tell stories, and then we wait to either validate or invalidate those stories. And the biggest story on my mind really is it's what's going to happen. What's going to happen? Well, how the U.S. is going to respond? Because I think they're going to respond sooner than later, and I think it's more likely than less to be favorable for decentralized currency platforms, um, because there's only two options for the U.S. It's either heading down the road of a totalitarian play to compete with the digital yuan, or it's embrace decentralized money networks. And it's one or the other. I see it as a very binary thing. And I look at things quite often in a very binary way. Yes or no, one or zero, up or down, so on and so forth. So just opening on an interesting thought that I think things are systemically on the verge of changing. And it's fascinating because you guys know I talk about time horizon a lot. And I don't see that as a 10-year time horizon. I probably see that as a 5-year or less time horizon for a significant change in global monetary system functionality, evolution, maturation, metamorphosis, some shit like that. Maybe even less than 5 years. Because what drives change? Change is driven by opportunity, greed, and so on and so forth. It's going to change quick. Today's topic, risk on, is used to generate risk off. Bam! Woo! It's a hot topic. I don't go risk on often, and that's why I want to highlight this topic because so many folks have a broad portfolio that's overweight, that is excessively risk on, and a great way to counterbalance the desire for risk on or the addiction to risk on is to add another component to the portfolio and ensure that you don't neglect it. Let's get into that. Let's dig in. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. A lot of chatter in the morning. Deeply confused. Gas fees going up. That means network activity. That means Polygon. Critical Mass, welcome. Big Zoo in the house. Dean, you're the man, Noah. Love the stream. Thank you. I hope it helps. Eigerman, sorry. Eggman, I like it. Costco Roses, thank you. Mr. Weeby's in the house. Wave, a pleasure. Paul, Captain Noah, you are changing lives. I hope so. I'm trying my best. I want people to do things different. It's important. It's important to help people prevent themselves from hurting themselves. And the crypto space is filled with opportunity for people to hurt themselves, devastate themselves. So we must be different. We must pursue different and help people from hurting themselves. Costco, the West is so behind in blockchain culture and industry, would be wise to pay more attention and see how a growth potential economy needs to grow, and this is the growth story going forward. Yeah, man. Just go on Twitter and look at the BSN. Seriously. It's completely integrated with Ethereum, Polkadot, and Cosmos, and Neo, and a bunch of other shit. But point being, those are three massive networks. Seriously. Martin's in the house from Houston. Always a pleasure. Montana, we can do better. 33 people in the stream, 12 likes. We can do better. Critical Mass says you're all risk on. So don't forget the cash position. You think of your risk on assets and the size they are, and I own 20% of my portfolio is this, 30% is this. How much is a cash position? Are you underweight on cash or overweight on cash? So right now I'm very underweight on cash and I'm playing risk on Matic, as you can see the chart here. What does risk on mean? Risk on means I have a large allocation to Matic. It's extremely oversized, and I have the potential to lose a shit ton of capital. I am prepared if I lose a significant portion of this capital, it won't bankrupt me, it won't devastate me. I have 15%, 18% of the portfolio I'd play on this asset, and for me that is an absolutely massive, massive position. And it'd be nice if it plays out because I also have it leveraged using Aave and Polygon. Not extensively leveraged, about 25% leverage. But this is happening soon. We're going to know a culmination to this trend formation today, maybe tonight by midnight. You could actually pull out the time bar and see. But look at the compression, man, on the long-term moving average, the short-term moving averages, particularly the guppies. And this is the 1 hour. If you go over to the 4 hour, I mean, this thing is just above the guppies, and it's just being held down. I changed my color scheme. I believe that's the 50 SMA. Yeah, it's the 50 SMA. It's literally just being held down by the 50 SMA on the 4 hour. It's below a couple of moving averages on the shorter time frames. Man, I changed all my colors. It threw me off. I believe that's the 200 SMA above. So it's pretty much riding the 50 and the 100 SMA, and the 200 EMA is in white, but the 200 SMA is above. So in the 1 hour, we got two resistances. But what's nice is, look, the 200 EMA is pretty much on support, coupled with an inverse head and shoulders. and a series of higher lows, significant series of higher lows on the hourly, right on trend. So this is why fundamentals tell us where to look and technicals tell us when, and Warren Buffett tells us to do concentrated bets. I like Matic. I will not hodl it. I will capitalize on it because I saw a narrative before other people. If this rips up to $1, $2, $3, I saw a narrative before they did. So I will be capitalizing on that fact. I will sell my assets to them at a significantly higher price because they believe they're seeing a narrative for the first time. But I saw it earlier. And that's the way capital markets work. It's a matter of conviction, risk tolerance, and being early. Now, unfortunately, being too early is quite indistinguishable from being wrong. That's just a fact as well. But this is a beautiful chart. You don't see beautiful charts like this often. This is a long flag. It's days. It's 9 days. 9 days, give or take. That's a big flag. This is taking a long time for this trend formation to play out, meaning you have no idea where you are right about here. And then you start to see the pattern emerge. I wish this dipped down to 65 cents. And this would, could you imagine if this dipped, it'd be even stronger. And then you'd have just an even more solid flag. Albeit because it didn't dip down, you got a decent inverse head and shoulders. So what has emerged is even more bullish confluence. So if this dipped down to 65, then you would have this clear series of higher lows, which would be the bull flag. But because it didn't dip down, you also have that pattern as well, the inverse head and shoulders. So lower highs, higher lows, inverse head and shoulders, symmetric triangle. Put the risk on. So I got the risk on. If it breaks down, guess what that means? It means that the Matic narrative is invalidated. If Matic is going to receive a huge amount of capital inflow because it has systemic meaning and it's affecting the emotions of persons in the market to see opportunity, that maybe there's something here that's going to grow and really cure the short-term gas issues. 102 Gwei is still not cheap. You're talking 30, 40, 50, $60 smart contract transactions on L1, but they're fractions of a penny on Matic, which is I haven't been using Ethereum much. A little bit now and then, but I'm not going to spend 30, 40, $50 on a transaction when I could literally just not even think about the cost of a transaction for a fraction of a penny. It's an extraordinary experience, really. Especially considering the beginning of the year, I was literally doing $200, $300, $400 transactions all day long, like $2,000 a day in transactions, and it was I accepted it, and I thought of it as commonplace. But now I'm entirely spoiled by free transactions, relatively speaking. Absolutely fascinating. Let's keep it going. Underweight on cash, critical mass. So what do I got? I got about, how much cash do I have? Let's see. Of course, I'm not connected. I'm very underweight on cash. Let's leave it at that. I haven't logged in a bit. I'll do it later. Sushi pulls are very cool, Todd. I think there's opportunity cost at the moment. So I made like $600-700 last night. I threw some capital in there. I'm not logged in, but the Matic Ethereum pool is cranking out cash. Ethereum USDC pool is cranking out cash. It's showing Ethereum here, but I see opportunity cost because unfortunately, as much as I wanted the overweight Ethereum position, I have 32 Ethereum and that's a node. And my perspective on that is if I have too much cash in there, I'm missing out on the opportunity that I can have with dollars to earn yield. So you can earn yield on Ethereum, obviously, but my mind is focusing on long term with Ethereum, and I look forward to a node in 5 years and 10 years. And sure, I could have multiple nodes, but then I also have to allocate twice as much cash to the position. As for the Matic Ethereum sushi position, opportunity cost, because this shit's about to break out, and I'm not interested in the impermanent loss. And it also forced me to have overexposure to Ethereum. This is fascinating because I'm talking about overexposure to Ethereum, and most folks are saying just buy Ethereum, accumulate Ethereum, dollar cost average. There's more to it. It's not just accumulating. You have to have a more sophisticated assessment, sentiment, and strategy to attack these markets to maximum potential. If Ethereum doubles, I'm kind of forced actually and bottleneck because the 32 is a critical number, but Bitcoin's not a critical number. If Bitcoin goes up to a 500,000 of Bitcoin, I'm going to have to sell some because I have to balance the portfolio. So it's not just having as much Bitcoin as possible. It's about the portfolio and a balanced portfolio, and that makes all the difference. If you focus on the structure of your portfolio and not on the price action or how much of a specific asset you have, you're going to hang your hat on something that you can actually attack. Because if something outperforms, you adjust the portfolio. If something underperforms, you adjust the portfolio. But that's the job. The job isn't for a specific asset to have as much of it as you can. I think that is the short-sighted way to look at these markets. Think of your portfolio as an artist thinks of a painting, or a poet thinks of a piece of paper. Craft it, structure it, hone it. An engineer thinks of his technical documentation or whatever project he's building. The subtleties, the nuances, be surgical with it. Craft it into something beautiful. It's a representation of you. And if your portfolio is maximum risk on, and you have no cash, and you own just volatile assets, you're expressing probably, uh, financial discontent. You want to achieve as much capital gains as possible. You probably have a huge amount of anxiety and a fear of loss because at any time these markets could shit themselves and go straight down. And that will trigger a huge amount of anxiety. But a portfolio can be considerate of that. And you can alleviate those emotions on how you're looking at the markets, or emotions resulting from your experience with the markets. We can do better. 44 people in the stream, 19 likes. Damn right, we could do better. Martin, Aave and Matic is my risk on. Then it's all going to USDC from there. So it's nice, and that's exactly what I'm going to play with Matic. This big leg, folks will point to that 22,500% rally between the last 2 years. But the narrative changed. It's a brand new asset, is what I see. Solana, Avalanche, Phantom, they don't have critical mass liquidity. They don't have nascent monetary velocity. Sushi threw $30 million and the capital flowed and the pools filled and the DeFi protocols are foaming. They're porting. They want access to the liquidity. They want to capitalize on the markets with transaction fees or what have you. And that's a money network. That's a monetary system, especially facilitated by the Aave money market, which is banking infrastructure, where people can collateralize debt positions and lend to generate revenue streams. So it's not just to say, Solana has investors and they're building. Yeah, okay, let them build. It's the same thing with Cardano. Let them build. They got cash up everywhere. Cool. Build. And when you have a money network and I could deploy capital on your money network and use it for opportunistic purposes, great. I'll do that. In the meantime, I don't want to speculate because I want to sleep at night and I want to make sure my risk tolerance is respected and I'm being considerate of portfolio balance. So I avoid speculative assets. I like empirical evidence. Look at the empirical evidence here. This is literally Aave and Curve because Aave is a money market and Curve is Forex. And they're incentivizing them. And QuickSwap is incentivizing itself. And Sushi is incentivizing itself to the tune of 30 mil. It's basically like, was it Tinder on a wood pile. And the wood pile being the fuel for the fire of monetary velocity. And the liquidity is the tinder. And then what happens is you get the spark, which is the debt, the leverage, the lending, the DeFi protocols, which encourage the debt, the leverage, and the lending. And then you get the spark of monetary velocity. And that's what we've had in Ethereum. And that's what we've had on Binance Smart Chain. Not that I like Binance Smart Chain. Or Hiko Chain from Huobi, which is literally just a carbon copy of Binance Smart Chain. And these are monetary networks. These are money systems. This is the same thing as the US dollar operating in the United States. We talk about them with regard to M2 velocity, M2 money stock, M1 money supply, quantitative easing, inflation, deflation. It's the exact same story that Jerome Powell talks about as the chairman of the Federal Reserve. It's the same stories that they have, except we're talking about these assets in digital form. So you could call these assets, in many regards, fiat currencies, albeit fiat is, contextually relevant to a sovereign entity, a sovereign country. But these assets have properties of not only money, which is downright fascinating, these assets have properties of bonds. And they have dividends. So they are like REITs. Go figure. Could you imagine what I see really is cash in the crypto space works. And that's really what I wanted to do this stream, is because risk on is used to generate risk off, and risk off in legacy finance is cash and bonds, but risk off in crypto is stablecoins. And guess what performs the best? Stablecoins. 30, 40, 50, 60% returns. It's basically crypto bonds. Deflation protective. If you get a liquidity event like we had in last March, or the world experiences a deflationary event, you're going to wish you had a significant portion of your portfolio allocated to dollars generating 30 to 60% returns. And then obviously, depending on how severe the deflationary event and how prolonged it is, you're selling your risk on assets and you're accumulating or growing or expanding your risk off portfolio allocation, generating returns. Incentivized returns will get diluted. Transaction fee, the sustainable portion of the yield, will likely experience a spike, if not a prolonged, extended increase in continuous revenue as quantity of transactions explode over time. Fascinating, huh? Demir's in the house, always a pleasure. Critical mass, Noah, can you move in with me? I wish, my friend, I wish I could do anything but sit here in front of this computer, and I need a vacation. And I need something different. I'm working on it. XVG has no deflationary pressures. It has no monetary velocity. It's best described as stagnant equity. There's capital stored in it that cannot be accessed. Sure, it could be used as payment, but it has no velocity, which means there's no reason to hold it. There's no significance. There's no yield you could generate with it. So what do I always tell you guys about your portfolio components? Every asset in your portfolio can be generating yield, can be put to work. And when you put things to work, it's the same as an employee. And the more employees you put to work, the less you have to work. So you're putting your assets to work so you don't have to. If you can't put that asset to work, it has no meaning. It has no purpose. Only speculative. So sure, fundamentals tell you where to look, technicals when. Take a look at the Digibyte chart. That shit's going to rip at some point just based on pure technicals and some of the strongest fundamentals of any UTXO blockchain. But there's no reason for the price to remain elevated. So what's going to happen is speculative action. It's the same thing. The narrative hasn't changed since 2017, 2018. The same thing will happen. Speculation will drive the price up, and it's the exact same thing that's going to happen with Doge, unless there was like a strong deflationary pressure, which is not going to happen anytime soon. There's no reason to hold the asset other than for speculative purposes. So what happens is, supply and demand, and if there's capital gains to be had, people are going to sell, and if there's capital losses, people are going to hold on until they're absolutely miserable and depressed, and they'll end up selling the bottom, and then that's what makes the bottom fall out of an asset, and you get your 95% drawdowns. And that's the way it's played. It's different this time. 2021 is different than 2017 and 18. Because now there's no reason to sell stablecoins, and now you could collateralize a lot of assets. I have no interest in the Bitcoin price. I don't care if it goes up or down. If it goes down, I have to repay some of my cash debt. If it goes up, I have more cash I could put to work earning 30 to 60% interest. I no longer have to think about selling a crypto asset. It goes down to $5,000, it goes down to 10 grand, it gets imploded. It doesn't matter. There's now a purpose for the asset outside of payments, which is basically the worst purpose of all for cryptocurrencies. Payments is a non-starter. The CBDCs will rule. The dollar rules. Nobody wants to use a crypto asset for payments because they expect it to appreciate. I would never use stablecoins for payments, which makes sense. Never use Bitcoin for payment. Anyone who uses Bitcoin for payments, they're out of their mind. Doesn't make any sense. If you're going to use Bitcoin for a payment, you borrow the cash against the Bitcoin and you use the cash for payment. And you go to work every week and you get an income and you pay off the debt. That's how you use Bitcoin for a payment. You borrow against it. Rob says, do you feel the rewards emissions in Aave and to a lesser extent Curve are creating enough sell pressure to push the price of Matic down? No, because only $6 million was allocated, albeit there's about $15 million allocated to sushi. So no, you're talking about basically $0 relative to the market cap of about $5 billion. In any regard, this chart does not indicate that. This chart indicates a consolidation period. This chart clearly has what I see as 3 drives down, which is a very classic Elliott wave theory. The inverse head and shoulders, which is standard TA theory, and the symmetrical triangle. This is one of the most clean-cut bull flags I could point out. Meaning this is a perfect example of an asset whose price is not being driven down. What happens is it ripped 200% and people were selling off, but new capital came in, more people sold off for fear that it would not go up. More capital came in. And then what happened was the cost basis reset kicked in. And you started to see the series of higher lows, which is bullishness. It ripped. People thought it wasn't going to rip any further. They sold off. Same thing. So this is basically this whole process right here is a process of exchange of hands from old holders to new holders. Most people, the average, will not sell unless they're in profit. If they're in profit, they sell from them being an older pair of hands holding the asset to someone new. And that's generally the way you need to think about the market. So when you see this compression of the guppies like this, what you're seeing is the price at which someone bought it compared to the price at which someone's willing to sell it constrict, which means it's a telltale sign of cost basis reset. What's really cool is also look at the first dip and then look at the second and then look at the third. It's getting smaller, which means there's less sellers. The price rips and the sell off, but each consecutive time, three more or less, drives down, there were less and less sellers. And the fact that you have a higher high here at the end, which means not only were there less sellers, the buyers stepped in at a higher price. This is a very bullish trend setup in almost all regards, especially the fact that if you look at the price action right here, I believe it's above the 200 EMA and the hourly. It's above the 50 SMA and the 100 SMA. Just with the 200 SMA above and below, you have some serious price action support. You have some serious moving average support. You have trend formation support and some very meaningful TA patterns. Fascinating. Let's keep it going. I'm kind of going slow today. I'm talking slow. I could do better. 51 people in the stream, 22 likes. We can do better. Todd, can you explain the new RC 1155 tokens Alpha V2 we're providing farm positions? Pretty sure those are where it's a 721 and an ERC20 combined in one. So I don't know the entirety of the details, but what I do know is Alpha Hamora V2 is awesome. Those boys are smart, and I like what they're doing. And their hack was well played, and they handled it professionally, and they've done their due diligence, and it's been a long time since V2 was shut down. Very professionally handled. That's a heck of a team. SS, do you have videos showing how to understand these financial products and how to actually use Curve and Aave? DeFi Dad does on Twitter at DeFi Dad. He's got all the videos. Demir's in the house. We can do better. I'm all risk off. Well, that's a great position to be in. And I always tell people, new entrants that I speak with in my office hours, move cash into Aave. Aave is a banking system. It's a money market. And then as you get more comfortable with the markets, you could deploy capital in a risk-on fashion to accumulate more risk off. So we're biased because we've been in this market for a while. So we have all of this capital deployed into assets, so much risk all over the place. But from a risk off perspective, you could really be surgical. 80% cash, and you pile in 20% into Matic, it rips 200%, and now you have substantially more cash working for you. More often than not, most people are too risk on. And in many regards, I'm not. I'm not saying. I'm doing not as I'm saying. So I'm extensively risk on in many regards, but I look for probably about 30-40% cash. Then again, I feel also comfortable with the markets and the assets that I have large quantities of, like Cosmos, Curve, and Ren. I can't sell any of that. I can't even sell it if I wanted to. It's just not sellable technologically. And they generate revenue streams, so that's the name of the game. Places 100x all in Matic perp. Woo! Wow! Can you imagine? Can you imagine 100x and this should just go straight up like 200%? Wow! And you put like 100 grand in, and literally in like 2 hours you walk away with like $20 million. Oh my god! Yeah, don't do that. Don't do that. Oh my god. Can you imagine? All right, I'm gonna wrap up the stream. I got a whole bunch of stuff I got to do today. All right, so I put a free channel, the main rationality only channel on the Discord forum, just for a little bit. Told everyone I do it till the end of the day, but I don't have time to sit and babysit Twitter for the time being. So I think I'm going to shut it down soon, meaning whoever's in is in, and that's cool. Anyone could join, it's free. I'm going to push people towards the paid channels because there's some great conversations going on, and we have some really special people in this forum. Um, and it's important to organize the commentary and narratives, and there's great benefit to the paid tier. Just food for thought. So that's my new fun place to hang out. It's just really great people going on in the Discord forum, um, and you guys are helping me just as much as I'm helping you, as you say. You know, everyone needs to bounce ideas off one another, and at any time anyone thinks they have things perfect or they understand everything, it's hubris, arrogance, narcissism, or some fancy word like that. Nobody knows anything. Nobody knows everything, definitely, and most people don't know anything, including myself. You guys think I'm not an oracle. I don't know everything. What I have is stories. I have rigorous rules. I pursue rationality, logic, and reason. And that's the difference. And that's how we make a difference, and that's how we do better. Sorry, I don't have many office hours lately. I'm trying my best. But if you catch me with office hours, I'm always happy to talk and help you guys. Thoughts on Curve holding his position over Uniswap V3? Unknown. I'm not going to dive into the question now. Let's hit it up in the forums. Todd, Alchemix teasing F deposits along with DAI. Alchemix. Scroopy triples. Woo! She did well. Trevor, cheers. Have a great one. You too, Trevor. Thank you, everyone, for joining me today. 44 people in the stream, 24 likes. We could do better. Friday, 12:08 p.m., May 7th. Thank everyone for joining. I wish you all a wonderful weekend, and I will see you all Monday. Peace.